Good evening, friends. All my student friends who are registered here for this technical program on Karo. I am C. Mangesh Kindre, Chairman of Student Skill Enrichment Board or Board of Studies Operation. I welcome you all for this program, which has been kept as a practical training module. Let me tell you, friends, that this practical training modules have started by the Board of Studies Operation or Student Skill Enrichment Board, so that in addition to the academics, what we are learning, we should have a little bit more knowledge about the practical aspects and how in practice or how in the when you're doing an article shape, these things can be useful to you and how you can adopt it so that your articleship will be much more meaningful. It always happens that in articleship, we students would like to do many activities, and at times you are not able to do. Say, for example, some people are in taxation, they are not able to do audits, or some people are in audit, they are not able to do taxation. If you can attend these kind of sessions, then you can get a holistic view. The Board of Studies Operation or Student Skill Enrichment Board this year also would like to go ahead and develop certain simulative models so that sitting at home also, you can have some kind of a hands-on experience on the areas which you perhaps may not be able to tackle in a practical manner in the office. As we all know, Board of Studies Academics is a board of ICI which takes care about your curriculum, your coaching in the curriculum, different types of suggested or revised test paper modules, etc. Setting up a curriculum. Whereas Board of Studies Operations or Student Skill Enrichment Board is actually looking after the overall skill development of the students. Here we would definitely have different types of programs. There may be conferences, there can be a quiz programs, or such kind of a talent development programs. This is one such kind of a program which we will be having twice a month, whereby the students who are attending will on the subjects which are near to the practical aspects of their article shape, or near to say one who wants to go in employment, certain kinds of tips are there. So these kind of skill sets we would like to develop by organizing these programs. Today, in this council year, council year starts after 12th of February. So I have got an opportunity. The President Sir has appointed me as a chairman of Student Skill Enrichment Board. And C.S. Sridhar Mupalaji, who was last year also vice chairman, he is again repeating as a vice chairman of Student Skill Enrichment Board with me. So we have decided to start this year or this practical training modules for this council year by organizing one program, today's program on Karo. As we all know that in a company audit, we do all auditing techniques we apply, and we do the audit of the company. While reporting, in addition to our normal report, or what we can say true and fair report, in case of certain companies, we have to report in Karo, that is company's auditor's report order. At times, at student level, generally you don't get an opportunity to draft the report. Generally, you don't get that how this report is prepared, what kind of things. I might have done certain things. I might have done a stock verification, or I might have seen the depreciation calculation. But how it gets reflected in the Karo report or the final report which is submitted to the company. So these practical aspects today we will learn. We are having with us the faculty for this session, C.A. Shirish Rahalkar, who is a partner in a leading firm in Mumbai. But in addition to that, we are very fortunate to have the chairman of Board of Studies Academics as our keynote speaker, C.A. Vishal Doshi. C.A. Vishal Doshi is my council colleague, and as I said, he's a chairman of Board of Studies Academics and playing a very pivotal role in structuring of the new curriculum and study material and related activities. In addition to that, Vishalji, of course, is a vice chairman of Auditing and Assurance Standard Board, and he himself is an authority in audits. And therefore, we thought it fit to start, in this dual capacity, a person who is a chairman of Board of Studies Academics, as well as the person who is expert in audit, to have a keynote address today. Vishalji is practicing chartered accountant in Vadodara and having a vast experience in the audit vertical of the Chartered Accountancy practice. He had been in a regional council. He was a vice chairman of Western India Regional Council and has got elected in the Central Council, and now he's a chairman of Board of Studies Academics. So I welcome Vishalji and Shirishji both for this session. And I would now request Vishalji to start this session by giving his keynote address and share the expertise with the students in that regard. So welcome you all, friends. Welcome Vishalji and welcome Shirishji. So let us start. Vishalji, I request you to take it over.
Thank you very much, Mangesh bhai. Very, very good afternoon, friends. It's always a pleasure to interact with students. I would also like to take this opportunity to thank the speaker, CA Shirish Rahalkarji, and the moderator, CA Sudhakar Reddy ji, for accepting the invitation of the SSEB to be present and share your thoughts. And special thanks to the office, the team SSEB. Friends, I would like to compliment here Mangesh bhai and Sridhar bhai both for starting this series, the PTM, as it is said, the practical training modules, and that also with Karo, because I believe now with the audit season starting, the 31st March being over, this is a very, very apt topic for the students, the article students, and like the dynamic chairman Mangesh bhai mentioned, that it is, I believe it's for both those who would be doing audits of various companies, as well as those who might be missing out on the audits. These sessions can be extremely very important for them. Well, friends, now coming to the topic of Karo. Actually, when we say the company's auditor's report order, that is what is the full form of Karo, it dates back to 1988 when it was the first time launched as the MAO Karo. Manufacturing and other companies audit report order 1988, that was what it was known at that point in time. And then over a period of time, it has undergone revision. Many times it was revised in 2003 and then in 2015, 16, and what we have now is the Karo 2020. I'll not dwell much with the technical aspects because we have the experts who are going to take you through that. So I would not like to duplicate the efforts. But I would just like to share at this point in time that, as students, it's very, very important to understand the reasoning or the logic, or I would say the expectations of the regulator when it comes to the Karo reporting. As I have viewed at Karo, as a practice leader, when I go through the questions, you can also go through the questions, and what I find that the Karo reporting is more on the governance aspect of various companies, because it's applicable to companies. So with respect to the governance aspects, it's, I would say, like a fact-finding questionnaire where the auditors are required to report on certain aspects. Why I say it is on the governance and fact-finding, because when you look at the questions, it says that whether the company maintains fixed assets register. So, it's like a fact-finding, it's a governance thing on the accounting aspects. Whether they have done physical verification. With respect to inventories, there are similar questions. Also with respect to the tax, the disputes, whether there are any disputes, undisputed amount which are paid, unpaid, when we look at those clauses which are there. Also, whether there is any default in the repayment of loans, the intercompany transactions, whether they are at arm's length or whether they are any such which are prejudicial to the interest of the company. So if we, look at the sum and substance of these questions, I have always found that this is more on the governance aspects with respect to the companies and more of a fact-finding questionnaire. As audit people, so I would not say just students or the principal, but I would say collectively as an audit team, it becomes very important because the Karo applicability is not throughout. There are certain thresholds. Like I said, I'll not go into the nitty-gritties of it, but there are certain thresholds to which the Karo is applicable. So one thing which I would like to caution, because during my interaction with members and students, many times what we have observed is that we follow copy-paste technology. And Karo, if it is not there last year, there is a presumption that Karo would not be applicable this year also. I think this is one thing which we all need to remember, that Karo has to be applicability has to be checked year on year. It is not a bunch of periods or something that if it is not applicable in year 1, it permanently becomes not applicable. So, that is one thing we have to keep in mind. And therefore, my request to all my student friends over here is, before you go on a company audit for March 23 ending, please pick up the financials of that client, of that company of the previous year. Look at the thresholds, whether those thresholds are breached or not, and whether Karo is applicable for this year. That is for financial year 22-23, which would be subject to audit. So first word of caution, please do that. It should not happen that the whole audit is completed, and then when the partner is reviewing it, suddenly you realize, Karo is applicable. And then you go back, rush to the clients and again ask 20 questions. The client is going to be very, very uncomfortable. Let me be very honest on that. I can see Shirish Bhai and Sudhakar ji both smiling because that is the experience that we have over a period of time. So first thing is, friends, because the thresholds of Karo are all related to the previous financial year, which has already been closed, signed off. And therefore, you can benchmark that for current year and check on the applicability. So that is the first part. The second part is that Karo is applicable. Last year be applicable tha ya nahi tha, but if for 22-23 it is applicable, you should have a checklist of that. And the questions should be posed either at the beginning or during the course of the audit. You should start verifying the details which are there required under Karo, so that you do not have to duplicate the efforts, as well as it becomes a part of the audit process itself, the whole questioning and the reporting under Karo. Like I said, it's a fact-finding questionnaire. That is how I look at it. And therefore, during the course of audit, during the process of audit, it becomes important that you are aware of what are the questions that are there under Karo, which are required to be reported on, and you make that as part of the process. So let us say when you are going for an audit and there is a question on the fixed assets verification, at that point in time, maybe when you are doing a general ledger scrutiny or when you are raising queries itself, you can ask for whatever are the documents that the company has in store with respect to the physical verification of fixed assets they would have conducted for the FY 22-23. And that should be part of the audit process itself. Let us say then there are, with respect to statutory dues, which are overdue for 6 months, which are disputed, undisputed. So when you are doing the ledger scrutiny and you find the year-end outstanding balances as part of the trial balance, at that point in time itself, you should start identifying that whether this would require or invite any reporting under Karo, so that you do not have to duplicate your efforts and it becomes the part of the audit process. And finally, lastly, I would like to say is that very, very important thing is the audit documentation. For the whole audit, yes, but I would, since it's on Karo, I would say very, very important. And believe me, as students, please ensure one thing you always have to keep in mind is that whatever is not documented is not done. This is the principle, this is the philosophy which all of us as students or as members, we should follow. And therefore, please ensure that you keep proper audit documentation with respect to the Karo that you have verified to support your reporting, or the principal who is going to report on the Karo. And because many times what we have seen is, you raise a query, you sit with the client, you solve that query, but you do not document how it has been solved. So what is left in your file, either in soft copy or hard copy, is the queries raised. But how they have been resolved, that is missed out. And that is very, very much required when you talk of the standards on audit, that audit documents have to be complete in all aspects. And therefore, keep this in mind. आप ऐसा है तो आपके ऑफिस में या वहाँ पे एक पोस्टर लगा दीजिए, whatever is not documented is equal to not done. I think that is something important which we all need to take care. So with this, once again, I thank Mangesh Bhai, Sridhar Bhai, the whole SSEB team for giving me this opportunity. In fact, I would say for making me the non-striker. Mangesh Bhai started the innings, so he was the striker and I was the non-striker opening this session. And I thank them for giving me this opportunity and wish you all a very, very happy learning and all the best for your career ahead. Thank you.
Thank you, Vishal Bhai, for excellent opening. And actually giving a right start to this session and dealing with the crux, rather critical aspects, which one should understand or remember while starting the work. Before I start formally start the session, I would request the students to popularize this series as much as possible, so that we can take and we can spread the knowledge and we can take advantage of the speakers who are coming here. Definitely the branches also, if at all it is being relayed in any branch, they also can look into it. And we will definitely host it as usual on YouTube also. I think that can be anytime referred to, so that it should actually help you in your practical training. So thank you, Vishal bhai, for your time. And I know you are rushing to another program. So it's nice of you to be sparing the time and you taking us through the initial stages of Karo. We have with us, as Vishal bhai mentioned, C.A. Sudhakar Reddy, who is a co-opted member of Student Skill Enrichment Board. He is from Hyderabad, and he will be moderating the session with, of course, Shirish Rahalkar, my very good friend, and is also speaker on this subject. Sudhakar will be moderating, and Shirish will take you through the practical nitty-gritties of the basics of Karo. So I would now request Sudhakar ji to take charge of the session and start the session for the benefit of the students.
Good evening, everyone. Thank you, Mangesh ji, for handing over the session. And at the outset, first of all, before introducing the speaker, I need to thank the SSAP board of ICI for initiating such a wonderful series of programs like PTM sessions. Because when we were doing the articleship, we don't have these kind of sessions. It definitely gives me a very happy thing, to taking the students through the practical aspects of the articleship. So those who did not get the opportunity of working in this side, so maybe in the articleship they're exposed to very few areas compared to they may not be having all-round experience. But these sessions definitely help them to have overview of the other areas where they are not exposed to. And yes, I thank the SSCB chairman and vice chairman, Mangesh ji and Sridhar Mopalaji, for taking the initiative throughout. And I also thank Mr. Vishal Doshi for giving his opening remarks. As he has rightly told, things not documented are not done. So that is one thing which we need to make it a mandate poster in our offices. Yes, now I take the opportunity to introduce our speaker for the evening, Shirish Rahalkar. By qualification is Chartered Accountant, and besides, he's a graduate in Commerce. And Shirish has been working in assurance and risk advisory and corporate finance for over a decade and a half. And his core expertise is in financial due diligence and valuations. And he has worked extensively in manufacturing, engineering, and financial services, including the insurance companies. And he has quite a good exposure towards the audits of IPOs, QIPs listed both in India and international stock exchanges. And with the vast experience, I definitely expect the students get much benefited with these programs to this particular session. And I now hand over the session to Shirish Rahalkar ji, and maybe the session is yours, and we will try to connect during the program, during the session.
Thank you so much, Sudhakar. I want to confirm, yes, I am visible as well as audible clearly. Thank you.
Yes, sir. Yes.
Thank you so much. So before I share my presentation and start with the discussion on clauses in little bit of a detail, first, thank you, Institute and the Board of Studies for giving me this opportunity. Sudhakar, thank you for the introduction, and I think the keynote address has set the tone right. And what I will be attempting to do in today's session is to discuss a few select clauses, considering the importance of these clauses and the available time with us. I'm not trying to cover the entire Karo of 21 clauses, but few clauses and how the practical reporting, there are some challenges, and how the auditors are expected to deal with. What are the do's and don'ts of the reporting, which need to be taken into account in order to ensure that we make a effective reporting. So that's basically the approach. I think in the keynote address, it was rightly said that what is not documented is not done, and so is applicable to Karo, which is a big combination of factual reporting as well as expression of opinion. And when I deal with specific clauses, I will try to explain how it's a combination of straightforward factual reporting in some cases and expression of opinion and exercise of a lot of judgment in some cases. to take forward the concept of documentation, I will like to add that carrying out the documentation of work done when it is being actually done is the best thing to do, because what I think was mentioned that you come to know that Karo is applicable at the last moment. Now, if you are documenting when you are doing it, encountering such kind of a calamity is less likely, and you are more likely to detect the applicability at an early stage. So that's one small thing. The other aspect that I wanted to discuss slightly on a general level is that Karo is one part of our audit report, and it is a part of a large deliverable which is called as the annual report, which company delivers, which contains a director report, a financial statements, our audit report, our expression of opinion on internal financial controls, and then Karo. So what we need to remember is that this is one of the part of the deliverables, and therefore ensuring consistency across all these elements of financial statements is critical. And since reporting under Karo has got implications and impact on number of other aspects of reporting in the annual report, one needs to be careful about it, and that also I will be discussing when I discuss specific clauses here. So thank you again for giving this opportunity, and now I think I'll start with the presentation by sharing the screen. Kindly confirm once you are able to see that.
Yes, we are able to see.
Thank you so much. So the agenda broadly is that to give some amount of introduction and then go to select clauses. In those clauses, we will first discuss what is the basic reporting requirement, what kind of audit work is required to be done, and then I will try to give you a couple of examples that I can present from the work that I have been doing. We will also discuss in each of the clauses at least one or two industry-specific dimensions that come into place. As I said, implications of reporting under Karo on other aspects of financials as well as our audit report we will discuss. And the factual reporting versus opinion, which is a key factor when we are working on Karo. That is the fourth dimension that I am trying to take into account. So the applicability of the Karo, I don't think I will go too much into the numbers part of it, because that's a pretty straightforward and one has to look at it every year when you are looking at the financial statements of a company and decide whether the Karo is applicable or otherwise. The three conditions with respect to capital and reserves, the total borrowings and the revenue have to be collectively met in respect of a private limited company if the Karo is not to be made applicable to a company. A few things that one needs to remember in the context of applicability, and that which are kind of blind spots and where some error can happen. One is that order is applicable to even a branch of a company in India, and therefore one needs to remember that if you are acting as a branch auditor in a statutory audit of a company, which typically is common in respect of banks, you are required to report under Karo at the branch level, and the auditor of the company as such is required to take cognizance of your report. The second point, I think I covered that the conditions are to be met collectively, and therefore even if one of the conditions is not met, the Karo becomes applicable. And when we were discussing that the applicability is to be looked at every year and every financial statement, one needs to remember that revenue for the purpose of Karo includes even the other income, that is the total revenue disclosed as per the Schedule 3 financial statements. And therefore, it is important to remember that in a particular year, if in a very small company, private limited company, you get a large amount of other income like a big refund or a big fee that is received from someone, it may happen that the Karo may become applicable for a particular year. So therefore, this is one kind of blind spots where the error can happen, and therefore one needs to remember that. The clauses that I propose to cover today are these: the property, plant and equipment and the intangible assets related clause where the various requirements with respect to physical verification of assets, the record of property, plant and equipment, and the other aspects. The inventory clause where the substantial requirement is with respect to physical verification of inventory, whether it is done appropriately. The statutory dues, which is a very significant clause, and a lot of effort goes from the auditors in terms of reporting on this clause. And then the reporting on frauds. This is another tricky clause where the application of materiality as well as what is meant by fraud, etc., come into picture. Applicability of internal audit and whether the internal audit is commensurate with the size of the company and nature of its business. This clause has been withdrawn and reintroduced in Karo over a period of time. Related party transactions, which is a buzzword nowadays, and every regulator has got specific prescriptions in relation to the related party transactions and testing of arm's length. Therefore, that clause I am going to take up. The going concern assumption and how to assess the going concern is another important clause. And the last one, which with respect to consolidated financial statements, where just one clause of the Karo audit report is applicable, and how to report on that clause we will discuss. So going to the first clause with respect to property, plant and equipment, and the first sub clause, whether basic requirement is that whether the company is maintaining proper record showing full particulars, including quantitative details and situation of property, plant and equipment. Now, this clause has been in practice for a long time. The details which are expected to be verified in order to comment on this clause, the details are a huge number of aspects of property, plant and equipment, and application of this clause and testing is going to be impacted substantially by the nature of industry that you are auditing. For example, if you are auditing a financial services company, some aspects of the fixed assets are not very critical. For example, a software company generally has only computers and softwares, and there are no much complexities in relation to that. However, if you are auditing a cement plant, verification of fixed assets or maintaining the records of fixed assets, it may not be very simple. There may be substantial amount of componentization, significant effort in terms of estimating the useful life, huge effort in terms of carrying out the physical verification, etc. So one needs to remember that depending on the industry, the effort, the focus, and the application of audit procedures on this clause will substantially differ, and therefore applying this clause in the context of the industry is very important. As you can see that you are required to provide the description of asset, the situation, that is the location of asset, the quantity. Now, quantity is something which is not very straightforward when it comes to a complex plant and machinery. That it may not be very easy to determine whether the quantity is correctly described or not when number of components go into making one machinery, and it may not be easy even to visibly inspect a part of a machine. Then original cost. Now, original cost has a unique dimension that when you are talking about extremely old plant and machinery which has been in use for a long time, because of the complexity of the records, the company's ERP going through multiple transitions, it may not be easy to determine the original cost of an item, and there may be situations where it is not readily available. So these kind of complexities one needs to keep in mind and appropriately direct their audit procedures in order to ensure that you get the right kind of information. The year of purchase, date put to use. Now, date put to use is another important item because the depreciation under a tax law is dependent on this date and the accuracy of calculation of depreciation. There can be situations in audit where you have a different date of date when the asset is ready to use and when it is put to use. So this is one of the important elements. What one needs to do when auditing this clause is that look at the fixed asset register and see whether these elements of information with respect to fixed asset are readily available. They can be retrieved easily and can be inspected and audited appropriately. So this is the clause with respect to the details of the fixed assets. Then when we go to the next part of it, the item which with respect to the ERP of the company that I mentioned comes into picture, that some ERPs which are traditional ERPs may not be able to generate the fixed asset register in a desired form giving all the particulars. There you may need to carefully consider whether while the company may be claiming, or you may be able to in a different ways inspect and say that yes, the records are maintained. However, if they are not appropriately available, you may need to consider as to how you want to report. With respect to the date put to use or rate of depreciation, etc. Again, you need to understand the ERP or the information system of the company carefully and ensure that you are able to get that information fully in order to comment on this case. When it comes to the physical verification of property, plant and equipment, it is important. This is a clause where a lot of subjectivity in terms of expressing an opinion whether the procedures of physical verification are satisfactory, whether the impact of such verification and the discrepancies noticed have been dealt with in the books of accounts appropriately. There is amount of subjectivity that will come in, because depending on the nature of industry and the complexity associated with that business of the company, there may be different practices. For example, some companies may choose to inspect or verify their assets over a period of 3 years. Some may say that all the assets will be verified at a particular point of time. So in this context, one needs to understand that adequacy of physical verification is a matter of judgment, and one needs to understand it in the context of the criticality of fixed assets in the context of financial statements. For example, if in a particular year the company has carried out substantial amount of capitalization, the physical verification of assets may become critical from that or next year of the company's audit. So this one needs to take into account while auditing. If we go into slightly into the nitty-gritty of physical verification process, one needs to carefully understand that whether the instructions in relating to the physical verifications have been appropriately given, whether the appropriate segregation of duties is considered while ensuring the physical verification, because it may impact the outcome of the physical verification and how much you can rely on it. Also, ensuring that the people who are carrying out the physical verification have the necessary technical expertise to understand whether the asset is in a working condition, if there are components to that asset the person inspecting is able to identify. So these matters may be important, especially when you are auditing a large manufacturing company. The verification program, as I said, needs to be such that the assets are verified over a particular period of time, for example, 3 years. We need to understand as to whether this program is ensuring that all critical assets get covered over a period of time, and impact, if any, of such verification is taken into account at a appropriate time. It is important to note that if for any reason the verification of fixed assets has not been carried out during a particular year, even though it may be as per the accepted program of verification, it is necessary that you make a mention of this in the report specifically. This may not necessarily amount to a negative comment. However, mentioning that is going to be important, and we need to ensure that because we are relying on a program, we don't miss out on this aspect. Material discrepancies again is a matter of subjectivity, where materiality has to be understood in the context of the financials and sometimes also in the context of asset that we are talking about. For example, if a discrepancy is observed in a plant and machinery, it may be a there may be some amount of materiality that needs to be ascribed to it because it is a production asset for the company. While, for example, the furniture and fixture in any typical large corporate may be a asset which is not so critical and not so important or material in the context of the financial. The discrepancies observed in the furniture and fixture may not be so critical because furniture and fixture has a limited useful life. Many a times the furniture or the interior work that company carries out gets absorbed in a particular set of buildings, and then one may not be able to get the exact record of it. But then these aspects have to be looked at in the context of the materiality, as well as the nature of the industry and the importance or the context of these assets to the company. So this is as far as the physical verification of assets is concerned. Just I will pause here for a minute and check with Sudhakar two things. One, whether I'm pacing my discussion right, and whether there are any questions that that we need to take up in between. If required, you please let me know. Otherwise, we can take the questions at the end.
Sure.
Thank you so much, Sudhakar. In the property, plant and equipment, this we may not dwell a lot on this, but important aspect that investment property, which is one of the assets which comes in once in a while in your audits. Not every company may have this, but we need to remember that investment properties are part of property, plant and equipment in that sense, and therefore need to be covered in reporting. Some assets which are to be considered as immovable or otherwise, whether the property, plant, the plant and machinery embedded in the land and building is to be considered as immovable property or otherwise, I think the direction or the guidance is clear that it is not to be considered as immovable property for the purpose of this clause, where you are especially required to report on the title documents of the property. Now, this interesting practical aspect that now I think we will deal with, that title deeds of any real estate property will depend on the jurisdiction that that property is situated in, and therefore some amount of understanding of the jurisdiction, the applicable legislations, and the manner of maintaining of the records with respect to ownership has to be understood. And as an auditor, we need to develop that understanding. For example, in some states, the agreements with respect to land are made in a particular manner. In some states, they are made in a different manner. One needs to understand that and accordingly look at the legal documents. When the documents are not in the name of the company, you are required to make a specific mention of that and report accordingly. On the property, plant on plan, sorry, I think I have skipped. So, on the property, plant and equipment, the other aspect is with respect to variation of more than 10%. Sorry, on the property, plant and equipment, the other aspect is with respect to intangible asset, as well as with respect to revaluation of asset. What we need to understand is that this is one of the clauses where we move from the statutory reporting to or the opinion-based reporting to factual reporting, where the specific mention is with respect to 10% of more of the aggregate value of each plant and machinery. And here we need to ensure that there is no judgment in that sense to be applied, and we need to report on a factual basis whether the variation is more than 10% or more. The revaluation is something that happens once in a while, and therefore one needs to keep an eye open as to whether such kind of activity has happened and whether the revaluation has been carried out in compliance with the applicable regulation, including ensuring that it is done through a registered value, and then report accordingly. This is one of the important additions that has happened, and here I will like to remind you, which even during the keynote address was stated, that every clause in the Karo has come with some perspective, some regulatory requirement or requirement of the regulator in order to get either a factual information or input in order to ensure a compliance with a particular law. Now, this requirement is with respect to proceeding, whether there are any proceedings which have been initiated under the Benami Property Act. You are likely to encounter this situation in rare cases because most of the well-governed companies will generally not have this situation. However, one needs to ensure that appropriate inquiries of the management are made in this respect and appropriate management representation also is obtained. One additional check, which is a very useful check in many other aspects of audit also, and that students should definitely take into account, is that the legal and professional expense is something that one needs to scrutinize carefully in order to look at the possibility of any litigations, not just Benami, but any other aspects of the audit also. And it may have implications on the contingent liability that we disclose, the frauds that we report, etc. And therefore, in order to making the inquiries of the management in this respect, one needs to also look at the legal and professional expense and see whether any such fees have been paid to any lawyers in order to defend such litigation relating to Benami property. This is the continuing reporting requirement, and therefore, if any litigation is outstanding during the year, even if that litigation has happened in the earlier years, one needs to report it as a open litigation. What one needs to also understand in this context is that this existence of a litigation in relation to Benami property may indicate weakness in controls in relation to ownership and verification of fixed assets and records of the fixed assets, and therefore one needs to evaluate carefully whether this is a one-off situation where some unfortunate event has happened and the case has got the proceedings have got initiated, or whether there is any indication of a control lapse in the context of the company. And also there is since this is a potential significant non-compliance, one needs to also consider taking into account our responsibility as auditors in relation to the laws and regulations that we need to consider in the context of reporting on the financial statements. Next part with respect to the property, plant and equipment, which has got recently introduced, is with respect to the intangible asset. Since this has never been in the Karo, there is a lot of inputs that one can consider in terms of reporting on this. The examples of these intangibles are given here, which are in the context of India's financial statements. There may be some items of intangibles that you may not find in the traditional GAAP financials, like customer list or customer loyalty. Unlike the physical assets, the existence and ownership of these assets is not simple and straightforward to verify, because the existence of these assets is evidenced necessarily by documentation and not physical asset which you can go and examine in all the cases. And therefore, one needs to carefully understand as to what is meant by a trademark, what is a broadcasting license, what is the validity of this license, how that license works, etc. And around that, one needs to design the audit procedures. For many of these assets, there are peculiar and typical regulations that will be applicable, and the ownership of these assets will be governed by those regulations. So, though in a limited sense, one needs to understand the relevant regulations. For example, when we talk about the softwares, when we talk about the copyrights, etc., or when we talk about the designs which are sitting in a information system, etc., the Information Technology Act may come into picture, and we may need to understand the relevant provisions of this act in order to understand the ownership documents or records of these intangible assets. After we have gone through the one of the large clauses of Karo, which is relating to property, plant and equipment, and where a lot of audit effort goes in. Next is the inventory, which is again effort intensive clause. As we spoke about the property, plant and equipment, this clause again is a very industry specific clause, and the effort that is required to be put in terms of carrying out the audit procedures on this clause will depend on the nature of industry. There are some industries where the inventories will be of a very complex nature, where auditing or verifying the work in progress that happens in a chemical factory will require very specific skill sets and understanding of the operations of that industry. On the other hand, a very typical trading company, the verification of inventory may be simpler, but at the same time, since that industry will be a high turnover or high intensive operations industry with a very limited life of that turnaround of that inventory. For example, in a typical supermarket, the inventory gets turned around, say, in every few hours, if not days. Against that, a very complex chemical plant may have an inventory which sits into the system for a number of hours or sometimes weeks together in a work in progress. So auditing of this clause and commenting on this clause will require a very clear and very deep understanding of the industry that you are auditing, and one needs to apply the knowledge of that industry while commenting on the clause. What is required to be reported is whether the physical verification of the inventory has been carried out at reasonable intervals by the management. The moment the word reasonable intervals comes in, exercise of judgment will be required, and we will talk about it more when I go to the next slide. Coverage and procedure of such verification, it is important that you give adequate weightage to the control procedures when you talk about the procedure of verification. And now we come to the second part, whether any discrepancies of more than 10% or more in aggregate of class of inventory were noticed or reported. Now, when it comes to this aspect, we come to the factual reporting from the opinion-based reporting. And here you need to be documenting on your work paper clearly that if verification was carried out during the year, suppose a company carries out the verification in a perpetual inventory manner, which I'm going to deal with in any case later, where a small part of inventory is verified on a continuous basis during the year. Now, in order to determine whether the discrepancies are more than 10% or otherwise, you will be required to aggregate all such verification information and then see whether the discrepancies is more than 10%. Now, here the application of materiality will come in a different manner. Here it is a very specific reporting, and you may not be required to apply materiality, and if it is exceeding 10%, you may be straight away required to. While when it comes to the procedures of verification, you will apply judgment, you will apply your professional expertise and the industry context and decide whether the coverage and procedures are adequate or otherwise. Now, as I mentioned, the perpetual inventory as well as the appropriateness of the procedures. The third aspect that I have mentioned here is with respect to inventories with third parties. Now, in a typical auto component industry where the tools and dies are there, many a times those tools and dies are lying with the vendors, and physical verification of dies or those tools happens once in a year. And the alternative to such verification, if the vendors are at distant places and the effort involved in going and physically verifying that may not just be justified by the carrying value of those items, the alternative may be to obtain the confirmations directly from those vendors and satisfy yourself about the existence of those items. In addition to looking at the production records and see that those items were actually in use during the year in terms of producing the products of the company, and then get satisfied that they are in existence. So this is an example where applying the verification procedure straightforward may not be applicable, and you are required to take into account the nature of the industry. here I'm giving a little bit of a detail with respect to what needs to be done. One, that management is required to verify the fixed assets with the inventories, and that verification has to be minimum once in every year. And as I said, there can be different ways of carrying out that verification, including the perpetual inventory. In order to get a satisfactory understanding of the coverage as well as the procedure of verification, it is essential that auditor participates in the stock taking process. It is okay even if it is on a sample basis, but auditor participates and gets a first-hand understanding of these procedures and satisfies himself of the controls relating to that. The independent count is in any case one of the key audit procedures irrespective of Karo, and therefore carrying out the count of inventories on their own by the auditors is an essential procedure. Again, this has to be applied in the context of the industry. The cutoff procedures are critical in the context of inventory verification, because if the year-end inventory verification is being carried out, in order to have the inventory records reliable, it is important that management takes adequate cutoff procedures, generates the inventory records from the information system, and then carries out the verification on that basis. The damaged obsolete stocks, this is one of the key aspects of audit, because these stocks will trigger the valuation of the inventories, and therefore knowing the management procedures about identification of these aspects of inventory is critical. And we need to be ensuring that when we talk about the discrepancy in the inventory records, this aspect is also taken into account. Materiality, as I said, needs to be applied in terms of the coverage and verification of the inventory and the frequency of such verification. There is the people who are auditing the manufacturing companies, they will know that there is a concept of A, B, C categorization of inventories, where A category of items may be a very small in number, but they will cover a substantial part of the value of the inventory. Now, the procedures that are defined by the management as well as auditors will be around the analysis of this inventory in this manner. The last aspect is with respect to the reporting requirement of more than 10% variation. As I said, there is a limited scope for exercising judgment here, and one needs to report if there is a more than 10% variation in the inventory the amount because of the physical verification. One aspect also to this I will like to add is that as an auditor, we need to go into further detail when you identify more than 10% variation, because happening of more than 10% variation of inventory on physical verification may indicate, not necessary in some cases, a weakness in the internal control with respect to maintenance of inventory and controls around the protection of assets by the company. And therefore, it is important to understand the reasoning why those variations happen, and then conclude on whether one needs to go into the further deliberation with respect to the internal financial controls around inventory. The next significant clause is with respect to statutory dues, and there are two items. I will not try to read out the entire thing. There are two aspects of statutory dues. One is whether the company is regular in depositing the undisputed statutory dues, and the word I think here is based that whether company is generally regular in carrying out the physical verification, carrying out the payment of undisputed statutory dues. And second aspect with respect to statutory dues is whether there are any undisputed, whether there are any disputed statutory dues that are outstanding at the end of the year, and we are required to provide the necessary details of such disputed statutory dues. So first, let us discuss the undisputed dues. Here, the important aspect is to be able to identify all the tax laws and the statutory due related laws that are applicable to the company. Then identify as to what is the mechanism of the company in order to meet these statutory requirements of payment of taxes. look at the year-end liabilities that are outstanding in respect of these and identify as to whether they have been paid subsequent to the year. For all the undisputed dues, also look at the mechanism of paying these dues during the year and whether all of them have been paid during the due dates. Here, depending on the nature of the industry and the local jurisdictions applicable to that industry, you may find that there may be various local taxes that are applicable and which may not be applicable in any other company or industry. So therefore, it is important that the auditor gets adequate understanding of various tax laws that are applicable to the company and accordingly carry out their procedures. One of the important aspects is the tax deducted at source is also considered as a statutory due, and therefore it is important that the procedures around payment of tax deducted at source are taken into account and the appropriate procedures are carried out to confirm that the TDS that company is required to deduct and pay has been paid timely, and if there are any delays, those are identified and reported wherever required. The next point, which I'm sure that many of the auditors do miss, is that the advance payment of tax is also constitutes payment of statutory due, and it is not easy to determine whether there is a delay in payment of advance tax or there is a short payment of advance tax, because this is a payment which is made on an estimate basis, and one is required to understand as to how the company has estimated the tax, whether if the company is required to pay tax on self-assessment tax after the end of the year, significant self-assessment tax after the end of the year, whether that was a result of incorrect tax computation at the earlier stages, and therefore whether there was any actually default in payment of advance tax, or whether the tax liability actually arose towards the end of the year and therefore the tax was paid after the year end. So this is a slightly complex matter, and one needs to apply the computation carefully and the judgment carefully. Now, another aspect is whether while I will skip maybe one or two items of that, other aspect is whether the materiality is to be applied when you are carrying out the procedures relating to statutory dues. Yes, materiality is to be applied. However, one needs to understand that any default in statutory dues, unless it is extremely insignificant, it is advisable to report on that. There is a specific reporting format that is provided, and any undisputed dues that remain outstanding for more than 6 months after the year end, they are required to be reported. If there are cases where the dues were outstanding at the year end and then they were paid before the finalization of financials, there is a way to report it, and you will report it by saying that they have been paid on a particular date after the year end, and you can comment accordingly. Yes, Sudhakar, you wanted to say something.
Yeah. See, I just wanted to know like two things here. One is advance tax, because one point mentioned here is auditor need to report on the any shortfall of advance tax. Like let us say, for example, during the year, the company might have missed the installments, but however, they have made up before 31st March, they have paid entire advance tax. In that case, should we required to report?
You will not be required to report. The situation can arise where what happens is that in a typical small company, if the tax audit has not been carried out, and the company has typical cash flow issues, and the company is planning to pay the self-assessment tax only towards a available time for the tax return filing, etc. There you may come into a situation of requiring to report. But what possibly needs to be ensured is that we have on our record the computation of advance tax and how it has been paid, and ensure that the computation is appropriately done and there are no misouts in terms of application of the tax provisions.
Okay, thanks. One more thing is, like some assessment is going on and auditor is expected to comment on the disputed things. So
Okay.
should we require to comment on the like expected outcome of the proceedings?
The requirement is not to report on the expected outcome. So I think in order to take up that, we can go to the next slide also.
Okay. Yeah, fine.
The format of the reporting is very specific. What is required to report is the name of the statute, the nature of the due, the amount that is disputed and unpaid, and the period for which the amounts relate to, the forum where the dispute is pending. Now, the remarks, if any, may be required in order to explain if there is any complex situation that is arising, or if you need to explain more about the nature of that dispute in a very peculiar situation. But basically, this is the form in which you report. Since you have now come to that point with respect to the disputed dues, let me take up that quickly and explain as to these disputed dues. The word dispute is a slightly subjective word, and one needs to apply judgment in this, because the description and nature of dispute under each regulatory provision or every law, there may be small differences in the way the dispute is perceived, and therefore careful application of judgment and to some extent to remain conservative is advised. And any dues that have been not paid and where the company has represented or appealed against the demand by a statutory authority needs to be reported here. There is a manner of aggregation that is required that can be done in reporting in this clause, and that can be applied. In the context of financial, one needs to also remember that this clause has got a correlation with the contingent liabilities that we report in the Schedule 3 disclosures in the notes to accounts. Here in this clause, we are basically reporting the disputed statutory dues, and in the contingent liabilities, what we are basically reporting is the possible hit to the profit and loss account of the company on account of any disputed tax liability or any other liability. There is a difference in the reporting, and therefore one needs to ensure that these two numbers are clearly understood and reconciled with each other. And as an auditor, we need to ensure that we don't create any inconsistency in reporting, because that can invite regulators' attention, and there can be inconvenient situations where you'll have to do a explaining. For example, I have paid a particular statutory due under a protest. Okay. In the Karo, I will not be required to report on that. But if that payment has been not charged to statement of profit and loss account and considered as a recoverable asset on the basis of company's position that this is a highly litigative matter and there is an uncertainty about the outcome, and the amount is in dispute, we may be required to disclose that amount in contingent liabilities, but it may not come in the disputed dues, and a situation vice versa can happen. So from the work paper point of view, a reconciliation between contingent liabilities and disputed statutory dues is very important. Now we go to a clause which is unique, and again it may not come up with every audit that you carry out. You are required to do a specific reporting on frauds. The question is whether any fraud by the company or any fraud on the company has been noticed or reported during the year. You are required to report the nature and amount involved is required to be indicated. Here, let me take this opportunity of picking up on one point. As I have said in the first line itself, that standard on auditing with respect to the auditor's responsibility to fraud needs to be taken into account while reporting on this clause, and one needs to understand the auditor's responsibility in that auditing standard as well as Karo, and ensure that we meet both these responsibilities at the same time. Now, taking this clue forward, I will like to remind our listeners that Karo is not a standalone item. So, application of relevant auditing standards, implication of Schedule 3 requirements, application of accounting standards, disclosures in the financial statements, implication on IFC report. All these aspects one needs to take into account while reporting on any clause under CAR. Now, when it comes to the fraud, one needs to ensure that the possibility of requiring to report under fraud, report any fraud, and detection of fraud needs to be taken into account in the planning stage of the audit itself, and appropriate audit procedures need to be designed around it. Adequate inquiries of the management need to be made in order to ensure that we have appropriate input from the management if any instances of fraud have happened. In order to understand what is meant by fraud, we can try to simply bifurcate them into two aspects: the possibility of fraudulent financial reporting, where the management involvement may be there, and misappropriation of assets of the company is another type of fraud. These are broadly the two types of fraud which may come into picture. I'm not trying to say that these are the only frauds, but when you talk about frauds, try to categorize them between these two, and then you will be able to take it forward in terms of quantification, in terms of nature of instance, etc. In order to understand the possibility of fraud, also auditor needs to ensure that any other inspection agency reporting by the internal auditor, if the company has got any special exercises done during the year, all these report auditors should carefully examine in order to understand whether any fraudulent incidents or irregularity has got reported, which needs to be evaluated further in order to determine the reporting on fraud. The other aspect of the reporting is need to report under the section 143(12) of the Companies Act, and one needs to ensure that if such reporting is required, it is timely taken care. As the auditors, if they detect any fraud, they are required to report under 142, and this reporting has a very high significance under the Companies Act, and this also has to be confirmed in the reporting under CAR. The last part of that reporting is with respect to the whistleblower mechanism that needs to be taken into account. This has come especially in the context of the listed companies where the whistleblower mechanism is mandatory, and one needs to make inquiries from the management at the appropriate time, and preferably from the planning stage itself, that whether any whistleblower complaints have been received during the period, and one needs to carefully understand the nature of those complaints, because whistleblower is not necessarily a fraud situation, and that too, especially in the context of financial statement, it may not be a fraud situation, and therefore carefully understanding the nature of whistleblower complaints that possibly may have been received by the company, taking adequate additional evidences from the management in terms of how the complaints were disposed of, etc., is important. And then the auditor needs to conclude whether any reporting with respect to fraud is required in this context. I have tried to identify a few key aspects relating to the fraud. As I said, a correlation that the moment you talk about a fraud event, one needs to immediately think whether this has an implication with respect to contingent liability. Because, for example, if an employee has carried out a fraud and in the process has siphoned up money of a customer, or has not paid the statutory dues and misappropriated money towards himself. Now, this situation may result into a contingent liability. This kind of thinking is required when you report on frauds. Now, there is an interlink between the clauses in Karo also. Now, look at here. If there is another clause which I haven't taken up today, but there is a requirement now in the new Karo that the stock statements quarterly submitted to the bank, they have to be in agreement with the books of accounts, and as an auditor, I am required to verify that. Now, if the stock statements have been falsified, and if that in a sense amounts to a fraudulent activity, if you notice that when you are auditing the auditing for that particular clause relating to stock statement, you need to take that into account here also. The related party transactions is another clause which has been introduced and which has been elaborated, where you are required to report whether the company has complied with the provisions of section 177 and 188 of the Companies Act, which require specific approval process in terms of taking appropriate approvals from the audit committee, board of directors, and in situations where the approval is required from the shareholders also. Well, this is a very, very factual clause, and one needs to understand that the verification of with respect to this clause has to be factual, and there is a very limited scope to exercise any judgment here. One needs to look at the related party disclosures that the company has made in the financial statements and carefully review the minutes of the meetings where approval of related party transactions in audit committee, board, and shareholder forums will happen. In this clause, again, one needs to remember that the definition of related party, there are various definitions under various acts. In this context, the Company Act definition and the definitions under accounting standards are relevant. However, one will need to apply the principles carefully when in a listed company, where especially from the 1st April 23-24, some additional aspects of related party have been introduced in the SEBI regulation, and the disclosures that are made in the financial statements will have to be distinguished in the context of reporting on this clause and the Schedule 3 disclosures. One of the clauses which have got introduced and reintroduced in the Karo is commenting on the internal audit, whether the nature of the internal audit applied by the company is commensurate with the size and nature of its business. One needs to remember that this applicability of internal audit is on the basis of various parameters with respect to the paid up capital, turnover, the loans, and the deposits. And the reporting on this clause will be applicable only when the internal audit is applicable on the basis of these criteria to that company. The adequacy and whether the audit is commensurate or otherwise will have to be reported once internal audit is basically applicable to the company. This is, if you ask me, this is the key aspect of it. The second aspect of it is that whether it is commensurate with the size and nature of its business is a very judgmental matter, and therefore one needs to carefully see whether the key processes relating to the company are adequately covered, and whether we need to report on the adequacy or otherwise in respect of the company. One of the yes, sir.
Yeah, Shirji, these limits of internal audit are either or both to be complied, like private companies you mentioned here.
Yeah. Those have to be either or limits, and private limited companies have specific only 2 limits.
Okay. Either 200 crores or exceeding 200 crores or exceeding 100 crores.
Yeah. Yep. Thank you. I will try to be slightly fast here. That one of the interesting aspects on which we may not dwell too much, but the audience can leave it in their thoughts, is that when you comment on the internal audit may be done by internal auditor, external agency, or in many cases in large groups a parent company's auditor, and exercising the judgment with respect to the commensurate with the size and nature will depend on who is doing the audit also. So I will leave you with that thought. Another important reporting requirement with respect to the going concern and material uncertainty with respect to going concern. One must remember that there is an elaborate checking process that now has been prescribed under the Karo. In any case, going concern is one of the aspects that is relevant when we are reporting in the main audit report also. However, under the Karo, the prescription in terms of what kind of procedures and what kind of information that you are required to look at has been made elaborate. So instead of dwelling on this clause, what I will like to highlight is that one, this clause has a direct correlation with the main audit report, and therefore one needs to remember that the moment you decide in a particular direction to report on this clause in the context of losses, etc., you need to go back to your main audit report also. One. And second, I will like to point out one context in the experience of last 3 years is that the pandemic suddenly created a situation of a not going concern for some companies after the year end of March 2020. And reporting on this clause could have been a very tricky situation, because when you go and calculate these ratios for that particular year, may not necessarily reveal everything that needs to be considered in the context of going concern assumption. But for example, if a tourist company's business has actually got severely impacted after the year end, though the year for the financial year ratios may not necessarily reflect everything, the post year end events may reflect that there is a going concern challenge. So one needs to really carefully understand and exercise high level of judgment on the reporting in this class. I'm coming to the last clause specific reporting now, and I know that I possibly have slightly short the time allotted to me, but I like to be quick. On the consolidated financial statements, only one particular clause is applicable, where you are required to accumulate adverse reporting made on any of the clauses of Karo by the auditors of components of the consolidated financial statements where the subsidiary or other auditors have made adverse remarks, and accumulate and report those remarks in the main audit report, consolidated financial statements audit report of a parent company. Here, as per the institute guidance note, there is no requirement to exercise any judgment in terms of accumulating those clauses, because this is absolutely factual reporting and there is a specific reporting format given, and you are required to make this report. If there is a tricky situation that can arise, if in a particular case the component auditor has not made a Karo report, then it is applicable. You can be in a difficult situation, but I pray that that becomes a rare of the rare situation and you are not required to address that. Another aspect where I will not try to go through each of the slides, but I will only quickly try to highlight to you that number of clauses that have been introduced in Karo 2020, there is a corresponding requirement of making a disclosure by the management in Schedule 3. And while we carry out the procedures on these clauses, we need to ensure that the reporting under that clause and in Schedule 3 and what we report in Karo, the linkages between that are carefully taken into account and we report appropriately. That is one element that I will tell here. And second important element, which is from our institute guidance note that I need to mention, is that if there has been any failure from the management in terms of making any disclosure in Schedule 3 on a particular item, irrespective of that, we are required to ensure that we report under Karo 1. Second, if that failure has happened, we need to make a specific mention of that the management has not made the adequate disclosure in Schedule 3. And 3, if that is a material or significant item which has got other regulatory as well as reporting implication, that need to be taken into account. So I think I will leave these 2-3 slides because they basically talk about these two principles. Now I will go to last 2 slides of mine where I'm talking about the application of materiality in the context of financial statement. Specifically in terms of Karo. I will quickly go through these items. One, that there is a specific guidance available in the guidance note of the institute, and I will urge our students to go through that as to how the materiality applies to different clauses in different manner. One needs to always remember that materiality will, the manner in which materiality is applied will differ from industry to industry. Especially when you are reporting on any discrepancy, In some cases, factual matters, you may not be able to apply materiality. In some cases, you are required to apply the materiality and may or may not report the discrepancies. Non-compliance with laws when it arises and you are required to report under Karo, one needs to remember that there is an institute guidance with respect to non-compliance with laws and regulations and reporting requirements for chartered accountants generally. One needs to remember that, and that gets triggered. Reporting, we mentioned that reporting on 10% variation, no application of materiality. Especially when you are considering the particular non-compliance as non-material and therefore you are not reporting on in Karo, please remember to document it. There are some very good useful guidelines given in the guidance note on Karo, and I have tried to accumulate a few of them here as thing to carry from this particular discussion with you. One, that all the procedures that you are carrying out in the context of the Karo, this is what you should report, that you have obtained the information necessary in order to carry out those procedures, and your conclusions are on the basis of such test checks as well as the representations that you receive from the manager. Two, when you are reporting on Karo, you have to report on all clauses irrespective of whether that is applicable on that for that company or not. Rather, when the clauses are not applicable, it is advisable that why that clause is not applicable, you report. One needs to remember that the reporting is specific in many matters and you should not confuse it with any other related matters that may come to your attention and restrict your reporting in Karo to the prescription. There is a situation where in some kind of compliances, the management explanation may be relevant in terms of explaining the particular situation, and it will be a auditor's judgment to exercise whether a management explanation to a particular non-compliance is to be included in your reporting or otherwise. Last but not the least, board of directors are required to respond to any adverse remark in your audit report and obviously in Karo. So remember that that response also you take into account and ensure that all your adverse remarks are responded to, so that the annual report is in that sense complete. So thank you very much for the listening, and I again express my gratitude to the institute for giving me this opportunity. Happy to take the questions from here.
Yeah, Shiriji, we have few questions from the dashboard.
Sure.
So I will try to put it for you for your clarifications.
Sure. Should I stop sharing so that?
Yeah, please.
Thank you. Yeah.
The first question from Gopalakrishnan from Coimbatore. So his query is, what about employee benefits like PF, etc.? Are these to be treated as statutory dues for this Karo purpose?
Absolutely. Basic, they are statutory dues.
Yeah. The other question from V. Subramaniam Iyer from Kochi. The question is regarding statutory dues again. Sir, can the auditor ignore the management representation on the statutory dues part and directly access, rely, or adopt the information pertaining to the client from statutory websites or portal of the respective statutory authority?
I will not be able to conclusively answer this because this is not a straightforward situation. In first place, when an auditor says that I want to access a particular statutory record directly without client's cooperation, it raises number of doubts with respect to the client sharing information for the purposes of audit and the fundamentals of getting the management responsibility in preparation and presentation of financials as well as putting the relevant controls around it. And therefore, I will suggest that that is not the solution that one should go for, because it can have number of other implications, including whether you are breaching client confidentiality anywhere. So the right way is to go ask for the information from the client, and if the client is, if you are not either client is not providing the information, you have actually other issues with respect to reporting more than Karo. And second, if you're not able to rely on the information provided by the client, you actually need to go back to the client and kind of discuss and decide as to whether there is a limitation on your audit being.
Okay. To add that, anyway, during the audit, we have the access to the various statutory dues paid by the client, I believe. So all those things we can anyway verify from their records because we'll have the access. If at all the client is not giving any access, then we may have to again take appropriate type of audit report that you are supposed to give.
Exactly.
Yeah. And these are the queries as of now. Like another query, like we from again Subramaniam Iyer, like Benjamin property case. Sir, will verification of rates? The question is incomplete, it seems. Let me post it in the chat, like you can see.
Sure.
This is the question that was posted. Benjamin property case, sir, will verification of rates. The question is incomplete, I believe.
Yeah, and I think possibly if he is referring to Benami properties.
Yeah, that's what.
Yeah.
Benami.
See, the thing is that if you read the guidance on that clause, as a auditor, you are not specifically required to go to a legal portal and try to find out whether a case against that company is outstanding anywhere. You are required to remain within the information made available to you by the management of the company, and as we said, one, seek a specific representation from the management as to whether there are any cases outstanding, and through the scrutiny of legal and professional, see if there are any issues.
And one last question from like student side, on behalf of the students I am posing.
Sure.
And the Karo applicability, like we have got some list, like for a company where 1 crore exceeds paid up capital and 10 crores the turnover limits and all. But again, in the Karo itself, we have got some exceptions or exemptions for a small company. And again, small company says like the limits are 2 crores and 20 crores. So how we need to see the contradictory version of a small company versus the...
So this has to be interpreted harmoniously. And since the general limits are lower than the limits which are prescribed in the definition of small company, with my experience, let me be honest, I'm not too much exposed to the those borderline small companies where you need to be keep taking call as to whether applicable or not. But my approach will be to err on the conservative side and make it applicable.
So going by conservative approach, we
yes, I will take that approach. Maybe there may be other views on it.
Yeah, very nice. Yeah, I don't think the portal we have seen the questions, and also we reached the time 6:28. The time being said by exactly we are standing at that time.
Agree.
I don't think we have any questions more. So let me, so Alokja is also there, but anyway. They're expecting no questions from the student side as on time, 6:29. So let me take through the vote of thanks for the session.
Yes, sir. Please go ahead.
Yeah, I thank, first of all, Speaker of the session, Shirish Rahalkarji.
Thank you.
Though the time is very limited, the 1 hour time, but you have taken in a detailed way, class by class, in a detailed way, that too covering most part of the syllabus like Karo. And you have explained very detailed way, exact student approach, how they can understand each item by item. And also, like, besides practical approach of you, like enlightened the students to my knowledge. And I thank you very much for sparing your time for the students and the cooking up with the initiative of SSAB board of ICI. Thank you very much for sparing your time. And I thank...
thank you so much. Thank you. It has been a privilege to me.
Yeah, thank SSCB board for taking this initiative, and thank the office staff of ICI, Alokja and his team for conducting this event in a smooth way. And I last but not least, thank all the students who have actively participated in these sessions and keep participating in these sessions and popularize these particular sessions, which are for the benefit of the student fraternity. Yeah.
Thank you so much, the esteemed speakers of the day, for sparing the time for us, and the most important, our students who makes all the difference. Their passion, the way they are keeping us the queries, keeps us moving. And thank you so much for joining us today. So the recording of these sessions, as mentioned in the session in the starting also, it is available on our YouTube channel as well as on our digital learning hub. So in case if you have missed out any session, or you want to go through the sessions which have been conducted in the past, so the entire library is available on our both these platforms. So we request all our students to kindly popularize these sessions amongst all their peer groups, so that more and more number of students can be benefited out of this initiative. Once again, thank you so much for joining us today.
Thank you. Thank you.
Thank you. Bye.
Should I sign up?
Yeah, please.